Hey, welcome my fellow investors and my future investors. It's me, E.T. Clark. And remember, I am not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who's always looking for ways to increase one's net worth. I want to welcome everyone to trade number one of the CitiGroup Poor Man's Covered Call series. In this video, what I'll do is I'll show you the charts that I use for my technical analysis. And remember, you got your fundamental analysis, pretty much tells you what to buy. Technical analysis tells you when to buy it. Also, we're going to take a look at the options change that I used, and in the actual show you the actual trade that I did in order to establish my leap position. And then the last thing I'm going to show you is my performance tracker, how I'm going to keep track of all of this. So let's go ahead and take a look.
Poor man's covered call plus CitiGroup equals consistent cash flow and option appreciation. This is how I came to that thesis and how I set up this poor man's covered call. Now, some of you are probably asking, why Citicorp? Well, I've had Citicorp for quite some time. I started accumulating it back in 2009, and of course, doing the real estate and the banking situation back then. Got it on the cheap. After that, it started paying dividends, so it's been in my dividend portfolio since then. Currently, I have about 344 shares. I had 344 shares, and what I decided that I could actually have a better return on my investment if I was to sell options on it. And initially, I was looking at covered calls, but then I thought about it. I said, you know what? Poor man's covered call, I think, will give me a better bang for my buck. So, other reasons why I decided to use this for Citicorp, this poor man's covered call for Citicorp, is because Citicorp is a S&P 500 company. It's less volatile than a lot of stocks. Now, I also have I write covered calls on a lot of stocks, and a lot of the stocks that I have are very volatile. Citicorp, if you will see that it trades sideways. It has a history of trading within a very tight range. It trades sideways. And currently, it's at the resistance. So I think that this here is an excellent way for me to see how long, and I'm going to shoot for at least 1 year of writing covered calls on this stock, at least monthly covered calls on this stock for 1 year, and see what type of returns I get. I think it's going to be, I know for a fact it's going to be much better than just holding the stock and getting the dividends. So let's go ahead and take a look at how I came to this thesis, the information that I was looking up to develop this thesis, and how I set up this poor man's covered call. This here is a position summary for when I had Citigroup in my dividend portfolio. It was under Charles Schwab in a Roth account. As you can see here, it shows that it pays quarterly dividends at 3%. I had a total of 344 shares. And for this year, it's going to pay me $694.64. I've already secured this 175 because I made sure that I sold it after that ex-dividend date. And this is what I got last year, and this is what I'm projected to get for the next 12 months. And I think I can do better than that. This here is the chart that I use to determine when I'm going to enter into this poor man's covered call. Now, when it comes to technical analysis, I like to use the RSI, the relative strength indicator, but also I love the Keltner channels. And the reason why is because it tells me what the support is, it gives me a mid, and it gives me what the resistance is. Now, at this particular time on the 18th, when I pulled this up, 18th of November, I pulled it up. It was at $66.82. This here is a 3-month chart. As you can see, it is near the support. Anytime you have a stock at the support, your best option plays are going to be cash secure puts and buying call options on leaps. All right. Now, just to kind of give you an idea, and if you notice, go back here to the 3 month, this 3 month, it's pretty much flat. Look at that. And as you notice, every time it gets to the support, it bounces up and heads north. Now, this here is a 1 year chart. Pretty much the same thing. It is a sideways trading stop. Not much volatility going on here. I love it. Let's take a look. Just to prove my point, let's take a look at a 3 year chart. Here's a 3 year chart. This area right here, we all know what happened. That was 2020. We know CV19 hit. Everything took a hit. There we go. But prior to 2020, look at that. Pretty much sideways, sideways, sideways. 2020, after that, came back up and is trading sideways again. An excellent stock for consistent. Now, I won't get the same type of premiums that I'm going to get with the more volatile stocks, but that's okay. I'm looking for consistency on a long-term basis and see what type of return I can get. This here is the options chain that I use. And this here option chain pretty much, I pulled up the January 2024. I'm looking for a leap. And with most leaps, you want to go with at least a delta of 70. In this particular case, the delta of 70 here is at really the closest to 70 is going to be 69, 55 call, 1650. I decided to go actually with the 63 delta, and that's the $60 call, and it was at 13.1. This here is the option quotes detail sheet, and if you look, remember what I said, that $60 January 2024 call option was at 13.1. 13.1 was the 52-week low. We already seen that it was getting ready to bounce off the support. Look at that 52-week high. So I feel that just from the leap option standpoint, I have also room for price appreciation when it comes to this leap. This here is my actual trade confirmation. It happened on the 18th. I bought 10 contracts for that January 2024 $60 call option. I didn't get it at 13.10. I got it at 13.50, but that's okay. The stock went up a little bit. It was still real close to the support. I paid a total of $13,506.60. That is my cost basis. Now I have control of 1,000 shares of CitiGroup between now and January of 2024. This here is my tracking sheet that I developed. I got this idea of a tracking sheet from watching some other YouTube channels and kind of came up with this one here. Just to kind of go over it so that you have a better idea of how this is set up. And the reason why this is important is because every time that I make a trade, this trade here is transaction or trade number 1. Now, once I start selling covered calls, what I'll do is I will update this sheet. As I sell covered calls, I'll continue to do videos on every covered call that I sell, and I'll update this sheet so that you guys can see exactly the progress that we're making. So this right here, let me explain this. Here is when I bought the call option. We know it happened on the 18th of November. The 19th January 2024 call strike price was $60. And the stock price at the time of purchase was $66.70. So that was an in the money call option there. All right, $6.70 in the money. The premium that I had to buy it for was $13.51. I bought 10 contracts, $13.510. All right. This right here shows the current price. After I populated this, the price of the stock did go up. At the time that I did this, it went from $66.70 to $67.12, and the current price now for that option is $13.30. I paid $13.51. If you see, I'm down already 2%. I'm down $210. I don't have a problem with that. That's definitely going to change. But this section here just kind of keeps track of a couple things. Of course, the symbol You've got the current price of the stock, my cost basis. This is the break even. To determine your break even price, all you have to do is take a look at add your strike price to the premiums that you paid. All right, just for one contract. That gives me a strike price, a break even price of 73.51. Now, as I write covered calls, I'll start to populate this here. And as I do that, this section here is going to be my profit and loss section. It will calculate the premiums that I received on my covered calls, where I stand right now when it comes to the value of that leap option. You add those two together, it's going to give me my cash on cash return on investment. As I was saying, the very next time that when I buy those covered calls, I'll update this sheet. I'll make a recording. We'll update it together so that you can see how all of this is calculated and how everything is updated. So my second video, my transaction number 2 video, will be updating covered calls on this sheet. Now, I am not going to sell any covered calls until the price of CitiGroup goes to at least $70 a share. Once it's at $70 a share, that's when I'll go ahead and start writing covered calls.
So there you have it. Now guys, if you like this video, go ahead and make sure you hit that like, subscribe, and notification buttons. Now my next video is going to be trade number 2. And that's going to be the first trade that we make when it comes to selling a short-term covered call. Now to all my fellow investors and my future investors, remember these 3 things. Save, invest, and apply what you know. Because knowledge is not power, it's the application of knowledge is power. Guys, I will see you on the next video. Take care. Bye-bye.